Guys, let me tell you what this economy actually means for your money right now. While people are watching inflation, headlines, and the stock market, the real story is happening inside American households. Debt is still rising, going up. Savings are still shrinking, and a lot of families are being stretched financially. So today, I want to walk you through 6 things households should be paying attention to right now. The first thing households need to be dealing with right now is expensive bad debt. Hear me out on this, okay? Credit card balances right now in America are over $1.27 trillion. That's the highest level that it's ever been in the history of credit cards, okay? And a lot of those credit card balances are sitting at 18, 20%, and people are even paying 25% interest. That's like loan shark type interest, for real. And let me be honest about what that is. That's not just debt, okay? That is wealth being destroyed right before our eyes, okay? You can't build wealth paying somebody else 20 and 25% interest. And if that's where you are right now, you already know it's a problem, okay? It doesn't work. If someone is serious about improving their financial life, high interest debt has to go, period. This is about money management. You got to organize your finances and eliminate the bad debt that's working against you. Now, the second thing that households need right now is just flat out cash, right? Cash money. Cash gives you breathing room when you got it. It's really like your safety net. It protects you from layoffs, job layoffs. It protects you from unexpected expenses, from economic surprises. But here's the stat that tells the real story. About 3 out of 10 Americans, 30% of Americans, have more credit card debt than they have emergency savings. Think about that for a second. People are carrying all this bad debt and have almost no cash set aside. That's really working backwards, right? Emergency savings should come before increasing your lifestyle spending. So cash is going to give you that stability that you want, that peace of mind. See, without having cash or enough cash, every little small problem turns into some type of bigger financial emergency that you don't want. So you got to have some cash. Now, the third thing that households should be working on right now is building a cushion in your monthly finances. And what I mean by that is just simply this. You want to increase the amount of money that you have left over at the end of every single month. Because too many households right now are living right at the edge. What some of us would call paycheck to paycheck. Every dollar coming in is already going out, being spoken for in a bill somewhere, right? Could be bills, but it could be payments, could be obligations, could be lifestyle inflation, lifestyle creep, whatever it is. There's nothing left for a lot of people at the end of the month. But financially strong households, they're always trying to widen the gap between what they earn and what they actually send out and spend, right? Because that cushion does a lot of important things for you, okay? It can help you pay off your bad debt faster. That cushion can help you build your cash reserves, that emergency fund. That cushion can also allow you to have more money to invest, right? In other words, this one habit of building up your cushion helps you do several of the other things that we're talking about on this video. So you want to have expenses worth $3,000, but you're bringing in $7,000. And you want that cushion to increase over the years, right? Look, there's really only 2 ways to build that cushion. You got to either reduce what you spend, lower your expenses, or increase your income, what you're bringing in. Both of them matter. But the bigger that monthly cushion becomes, the more financial stability you're going to create for yourself. And something interesting happens when you reach that point where your cushion is big. You sleep better at night because you know that you're bringing in way more money than you actually need to cover the bills. That's a powerful place to be financially. Now, the fourth thing that households need to be focusing on right now in this economy is something almost nobody talks about when the economy gets shaky. Everyone starts talking about, we got to cut our spending, right? Spend less money, lower our expenses. But very few people talk about increasing their economic value. See, right now, guys, unemployment is right around 4.4%. But we saw that the labor market last month lost about 92,000 jobs, if you believe the reports, right? So whether you believe those numbers or not, it never hurts to get your skills together. See, every economy is going to reward skills, reliability, production, and people that bring value to the marketplace, to other people or other systems or other organizations. So instead of sitting around worrying about the economy, a smarter question that you can probably be asking yourself right now is, how do I become more valuable in this economy? Maybe that means taking some classes. Maybe it means getting a certification or two. Maybe it just means learning a new skill or getting better at what you already do at your job, wherever you are, right? Maybe it's just increasing that expertise, okay? Because the reality is this, okay? In almost every economic cycle, the people who keep improving their skills are the same people who keep improving their income. That's just a fact. And income growth is one of the most powerful financial tools that a household can have. Now, the fifth thing that you need to be doing right now in your household is continuing to invest your money. Even when the economy feels uncertain, like we see, inflation stubborn. The latest CPI inflation numbers just came out a few days ago, which the CPI inflation rate numbers is basically the rate at which prices are rising, excluding the volatile food and energy. That rate, that CPI inflation rate right now is 2.4%. Which is lower than we were a couple of 2 or 3 years ago. We know that. It's still not down to what the Fed wants at 2%, but it's coming down supposedly, right? But here's the deal. Economic cycles always change, so you got to be ready for them. One of the biggest mistakes that people make is this: stopping investing when uncertainty increases, right? Panicking when uncertainty goes up, right? People panic, they pull back, they wait for things to feel safe again. But listen to me, guys. Real wealth is built through consistency and ownership of businesses, i.e. stocks, ETFs, index funds, right? Ownership of various markets, even real estate, ownership of assets. That's what I call money multipliers. And it's really important for us to know. So we want to continue to multiply and add to our wealth. How do we do it? We keep investing. We don't stop. We don't panic. We don't quit. We don't pull all of our money out. We keep going. Dollar cost average, right? Now, the final thing that households need to be doing right now is simply this: know your numbers. Because when household debt in America is 18.8 trillion like it is right now, that tells you something. A lot of people are operating financially with no real structure. They don't know their net worth. They don't know what their annual expenses are. Most people don't know what their savings rate is, saving and investing rate. Most people don't even know what their retirement number is. And here's the challenge for you. If I asked you those numbers right now, could you answer? Do you know what those numbers are? If you don't know them, you really don't know how stable or shaky your financial situation is right now. That's why in my last video, I talked about the numbers that you need to know before you retire. And really, those are numbers you need to know right now. If you're 30 years old watching this, or you're 45 years old, you still need to know these numbers, because these same numbers tell you something else. They tell you how strong or how fragile your financial life really is right now. The numbers don't lie. So you got to know them. Look, in my next video coming up, we're going to take a closer look at the latest economic data and what it might be telling us about where the economy is heading. But regardless of what the headlines say out there, the news and social media in the next several days, households with a financial system are always in a stronger position than households operating without one, just on the fly. Whatever's whatever, right? That ain't a system, right? When you organize your finances, when you manage your debt, when you build in some stability and you continue to invest and you make sure you're not panicking, what you're really doing is you're creating a financial system that works regardless of what the economy does. So economic cycles, they're going to change, right? Inflation's going to go up. Inflation's going to go down. The stock market is going to be volatile, right? It's going to dip. It's going to move with some volatility. Job numbers are going to be all over the map. We know that, right? We can't necessarily trust them all the time. But households that understand their numbers and they operate with a financial system like I'm talking about are going to make it through, no matter what is taking place out in the economy. Because real financial freedom is not about trying to predict the economy. It's about being prepared for the economy. Right? Listen, if you got a value from this video, do me a favor, smash that like button for me. And I'm challenging you to share this video with at least one person who you know, who needs to hear it. Always remember, guys, the best person to take care of the old you is the young you. Until the next video, peace.